Hey everyone, welcome to this week's video review preview watch list, or watch list preview. Yeah, something like that. Okay, there's quite a few on. I have not quite a few. I think I have 7 total, but there wasn't a lot that I liked on the inside week. And you know, I love playing the inside weeks. That's what I've had most of my success with. But there wasn't a lot to choose from, so I did do a couple other scans on some other setups. So here's what I'm looking at for this week. And a lot of these I won't trade. I don't trade ANTM, Anthem. Um, Maybe I will. I don't know. I've never traded it. So I'd have to see how the spreads are on the options. Lululemon I've traded a few times. Micron I've traded a few times. MRNA, I think I've traded once or twice. Target I've traded a few times. Qs obviously I've traded a lot. SQ I haven't traded too much. A lot of it's going to depend on the volume and the spreads. I like to stick with no more than a 10% spread on my options. So if the bid is, if the ask is $2, $1.80 is about the lowest I want to see on the bid. Much more than that, and that's roughly 10%. Much more than 10% spread, I try to stay away. I don't like them because if you have to stop out, naturally, if an option trade starts going against you, the spread gets even bigger. Um, so it magnifies it so that 20-cent stop may turn out to be a 40-cent stop. So you may end up looking at double whatever you're planning on your stop being. So I try to keep tighter spreads. It's not as bad if I'm looking for something to swing for, a few days and I'm playing, if I'm playing a month or two out, then I'm not as concerned about the spreads. But yeah, if I'm scalping or day trading, I want to keep tight spreads on stuff I trade. So here's what I'm looking at, and I'll go over charts with you here. So let's look at Anthem here first. ANTM. Take a look at the year. It's been good on the year. It's pulling back a little bit recently, but it's still a pretty big green candle here. The quarter, inside on the quarter, kind of not doing a whole lot. I mean, it did pop up, it did pull down, but we're kind of still where the quarter opened for the most part. And there's still quite a bit of movement here. I mean, you're looking at 383 for the open, 378 now. It's $4 move. I mean, that's roughly 1%. On the month, you're looking at a 2 down, but it has started to bounce back up, so we'll see what this is going to do. This isn't one of my strongest setups that I like. I do like this big inside candle here on the weekly, so that's what I'm looking for. Additionally, once we pop above that, we'll likely be above the 9 EMA. So that's the reason I like this setup. We're looking at, for a trigger, we're looking at a break above this inside candle, which is 381. So a break over 381 is your trigger. And for targets, I like to go down to the next time frame down. So we look at the daily chart for targets. We have a previous high here, which is 381.93. Not a big move. It's really not worth it for a 93-cent move, but the reason I put these in there is it gives you something to put a stop at. This is a pivot high here. So what you're looking for when you trade these is you want to take out people's stops. So you're going to have people are going to maybe put their stops right here. Some people they may look at this and say, okay, I'm going to put a stop right here. I'm going long. I'm going to put a stop here. If it breaks below that, you're going to see a bunch of selling. So you want to try to keep your stops right, pretty close to where you entered. Move them up as you can go. But on the flip side, if you went short on this, say you shorted this right here on this candle, you're probably going to have your stop right here. If it breaks above this, it's going to trigger a lot of stops, which are a lot of times automatically triggered. You're going to have a lot of natural buying coming in, or a lot of stops being bought to close out the trades, to cover the trades. That may also trigger, you're going to get a volume, you're going to get, it's a level, a pivot, high break. You may get some natural buyers coming in, which is going to even drive it up even higher. So if you break above this, let's say you break this and you come up here, maybe you're up in here, that's a good time to move your stop to here. That way if you get stopped out, at least you're not, you might make a few bucks. It might not be much, but you'll make something. So that's why I put these levels in here. It's not necessarily a target to sell at. It's just something to keep in mind that, hey, I can move my stop to here now, maybe just below here, because this is going to offer a little bit of support. It's not going to be an extremely strong support like a low. Like say this here is going to be more support than this would be, but it's still a level that might offer support. And if the buyers are strong enough, that support's going to be enough to hold it. So that's target 1. Target 2, you have this big huge red candle on a lower time frame, like let's say the 60. You're going to have a lot of stops in here. You're going to have a lot of candles, maybe a high here, high here, high here. It'll also trigger all those stops, which helps drive the price up. So we get to here, we actually have a gap here. I didn't even realize this gap was here, but target 2 is going to be the top of this candle. Target 3, I would say, would actually be the gap fill right here. So I'd be looking at that for target 3. In fact, let me go ahead and put that in there. So T3, and you get to see how I do this real time. Inside, week, up. So now what I'm going to do is I have to change this one to T4, target 4. So I didn't realize there was a gap there. So that's gonna, we may, once we fill that gap, we may sell off. So keep that in mind. Gaps are always good support resistance levels. So that's what I'm looking for on Anthem. The next one will be Lululemon. Lululemon, let's take a look at the year. Not too pretty on the year. The yearly chart looks pretty ugly. So something that you got to keep in mind. Yearly chart doesn't look good. Quarterly chart, 1 second here. I got my neighbor's cutting grass and my security cameras are going nuts because he keeps triggering it. So alright, turned off the alerts so my phone quits going crazy. On the quarterly chart, not a pretty chart on the quarterly either, but this is it's not a hammer candle. And I know, I don't want anybody saying, oh, this isn't a hammer candle, this guy doesn't know what he's talking about. I know it's not a hammer candle, but it's a hammer-ish candle. The bulls started taking over once we got down to 1750-ish. Bulls kind of took over and drove the price back up. So what we're going to look for is quarter may be on its way to reversing. On the month, not a great looking month. It's green and it's a 2 up, but it's sold off recently. So let's take a look at the weekly now. On the weekly, we still have an inside candle. Kind of a doji-ish candle. Not quite doji, more of a spinning top with this price range here. But look for a break above this. And again, this isn't one of the... Actually, I thought this was Lululemon. I don't know what I was thinking. It's Lumber Liquidators. So sorry about that confusion. Look for a break above this candle here. And if you go down to the daily chart, once you break above that, which is right here, you're going to have a target. This, you could call this a target, but it's really not much of a move. I don't really like this as much as a target. I'm looking at it, target 1 up here, target 2 up here. So, and this line represents a broadening formation. So that's what I'm looking for Lumber Liquidators. I told you I don't trade that too often, so that's why I got confused by, I called it Lululemon. Micron. The year doesn't look very pretty. Shooting star on the year. And if you look, you see I'm looking for puts on this, looking for downside move. Year looks ugly, really weak. The quarter, really weak. The month, really weak. Oh, the week, really weak. So we have a doji here on the weekly chart, inside candle. So we're going to look for a break below this candle, which is 69.04. If we come down to the daily, we can take a look at some targets here. You have to go way back to see lower, lower targets, lower price closes. So 69.04, which represents this low, this pivot low here also. This one was actually 69.14, so really close to the same low here. Target 1, we're going to look at the bottom of this candle, 66.76. Target 2 is the bottom of this candle at 65.14. Target 3 is the bottom of this candle, 63.58. Target 4 is the bottom of this candle, 62.61. I know it's kind of hard to see that. Let me zoom in a little bit. So here's our trigger. Target 1, target 2, target 3, target 4, and you can see this is way back in December. So that's what I'm looking at for Micron. Neither one of these three, ANTM, Lumber Liquidators, or Micron, they're not real high on my list as far as my level of positivity, my level of confidence in them. They're not great charts. They may work. If I do trade them, I'm going to keep tight stops. So now we're looking at the 2 up, 2 down charts. So the reason I say 2 up, 2 down, because we had a down candle. Now we're looking for it to break back to the upside. So MRNA, Moderna, on the year, been a pretty good year. On the quarter, pretty good quarter, but it's pulled back quite a bit recently. On the month, ugly looking shooting star in a month. On the week, we have 2 down. We have a shooting star followed by a doji. So we're looking to break above the top of this candle, which will give you your 222 reversal. Break above this candle, 413.30. You come back down to the daily chart to look for some targets. And I'm not saying you can't use a weekly chart for targets. The problem I have is you're looking at 413.30 as your trigger. If you go off the weekly chart, your target is $80 away. Not saying it won't get there, but that's a big range. So I always like to come down to one time frame lower. If you're let's just say you're trading strictly off the weekly, where do you put your stops? Once you get up here, where's your stop? Once you get up here, where's your stop? Are you going to leave your stop way down, I don't know, here, here, here? Sure, if once you get up here, you probably move your stop to break even, but where do you stop? Where do you put your stop after this? Maybe the high of this candle is your stop. If you go to the daily chart, it helps define that a little bit better. So here's your trigger. Here's your target 1. I don't know if this is a gap. 453.73. 454. Yeah, there is a slight gap there. So we do have a little bit of a gap here. So this is going to be your target 1. If you break target 1, let's say you come up here, now you put your stop here at target 1. With that, if you're going off the weekly chart, you're just kind of picking a random stop. You don't really know where to put it. So now you can put your stop here once you get above this level. And not, 453.73. I'm not saying if you hit 453.75, move your stop here. But maybe move it up halfway between your trigger and here. Move it up to about here maybe. That way if you do happen to get stopped out, you make some profit. But if you get a little poke below this and then a bounce back up, you don't want to get stopped out on that either. So wait till you're up, at least on a stock of this price, maybe at least $2 above this level, and then move your stop up. If it comes back down and you get stopped out, so what? You got a $40 profit there. So target 1's here, target 2's here. There is a slight gap here. I would consider this target 2, the bottom of this candle. It's only a 27-cent difference, but I would still be aware of it. I'm not going to mark it on this one because it's so tight, but be aware of that. You may break this and get to this level, and you may pull back a little bit. And that's one reason why I said put your stop down about here, because you may come back down after you hit this bottom of this candle. You may come back down a little bit and then go back up. So you never know. You may hit this level and you come straight back down. But just options. That's what you want to have. And I don't mean options as far as calls and puts. You want to have different options as far as your stops and your targets. So moving down to a lower time frame, and if you wanted to even get more, a little bit more granularity, you could even move down to the 60 on this, or maybe the 4 hour. But just what how I do it, and it's worked out well for me. Target, it's been awesome on the yearly. Quarterly's been good, although recently it has pulled back a little bit. Monthly, it's a 2 up, but it's red. That's called conflict. You're a 2 up, but it's red. It's not looking pretty right now on the monthly. Weekly, this is definitely not a hammer candle, but the bulls were in charge at the end of the week. So let's take a look and see what we can do with this. If we break above this, this isn't one of the strongest, but what I do like about this chart is look at this uptrend it's been in. It's bounced off of just about every level. When look at this candle here. This candle is very similar to this candle. It's not an outside candle, but very similar. And look what it kept on doing. So I do like this, that it came down, it bounced, it came down below the 9 EMA and it bounced right back up. And since this stock has been so strong, look for a break above this, 263.49. That's your trigger. Come down to the daily to find some targets. Your trigger's here. Your first target is going to be this high here, 264.60. Second target is going to be 267.06. Now from here, where I like to look is look at your broadening formations. We have a broadening formation here. This is a high. All-time high? Yes, all-time high. So let's take a look at the daily again. Keep an eye on your broadening formation. The price is going to want to go to that broadening formation and see what happens. And at this point, what I would do, since you're all-time highs, you don't really have targets, or naturally you're going to move your stop up to probably about here once you break it. But keep an eye on maybe the 2 hour, or the 60 minute or something. Once you see a reversal happen on the 60 or the 2 hour, even the 4 hour, however you want to do it, once you see a reversal on that, then that would be your exit point. You break above all-time highs, start. And what I mean by this, let's say, let's go over here and pretend none of this chart exists now. Let's say right here, you're at all-time highs. None of this past here exists. You're at all-time highs. Start looking at the 60-minute chart. You see a reversal. This is a reversal. Even though it's green, it's still broke. This here, this is a perfect example. Say you're looking at the 60 or maybe the 2 hour. You got a reversal candle pulling back down. There's your exit. Once you break the low of this candle, get out. You may want to use your 9 EMA as an exit. Use it as a stop. A close below the 9 EMA, maybe your stop's there. There's different ways to do it. It really depends on how you want to do it. I'm not telling you the best way to do it, the right way to do it. Just different ways. This here would have stopped you out. This wouldn't have stopped you out because you didn't close below the 9 EMA. This would have stopped you out because you did close below it. Just another way to think about it. You may want to use your stop, target up here. Once you hit the broadening formation, you sell. Maybe set a trailing stop. Maybe set a stop for a break below or a close below the 9 EMA. Maybe set, we have a 2 up. This is still a 2 up, even though it's red. It's still a 2 up. A break below this candle would be your exit. your stop out. Different ways to look at it. Okay, now we're going to look at the 122, which is called a rev strat. In the strat world, it's called a rev strat. Qs, extremely strong on the year, extremely strong on the quarter, extremely strong on the month, although it is this month, it's, I don't want to say it's losing momentum, but you know, we're slowing down a little bit right now. Just taking a breather. If you look at this on a lower time frame, there's going to be consolidation here. You're going to see consolidation on a maybe a daily time frame. On the week, yeah, you see it right here. We have an inside candle. Inside candles represent consolidation. Even though it moved down here, it's still consolidation. It didn't break the high. It didn't have enough strength to break the high of this candle. Didn't have enough weakness to break the low. It's consolidation, just chopping around. If you look at the daily, there's your chop. You're stuck inside of this candle right here. From here to here, you're stuck all the way till this candle here. That's when you finally broke out of this range. So you have a lot of chop here. So it has lost momentum, but maybe it's just taking a breather for its next run up. Maybe it's taking a breather and it's going to sell off. We don't know. I don't try to predict what's going to happen. I look at the possible scenarios and I react to what happens. So on the weekly, we have an inside candle. You know, it's a good strong candle. We also have, you know, it's, what's this called? Oh heck, Dragonfly Doji, I believe. But either way, break above this candle, go down to the daily, and look. Here's our trigger. First target is here. Second target is here. Now we're at all-time highs. So not a big range. We're only looking at what is that 89-cent range from the trigger to the second target. But again, same principles apply. You have your broadening formation. Watch your broadening formation. See if you get up to that level. Maybe set your target there. Maybe set your maybe do a trail stop. Maybe set a stop loss on a close below the 9 EMA. Maybe watch the 60-minute chart or the 2-hour chart, and when you see a reversal candle is this one. This is not a reversal. We're still 2 up. But once we broke below this, now you have a reversal candle. Another scenario to exit from, stop out on. Square. I don't trade this one too much. Been pretty good on the year. Kind of pulling back a little bit. Same deal on the quarter. Pretty good, but pulling back on the month. We're starting to form a shooting star here on the month. Let's see how it goes. If it continues coming down, we're definitely looking at a shooting star. You know, it's kind of a shooting star here, but a shooting star, the definition for hammer or shooting star, the strict definition is that the tail or wick has to be at least twice the size of the body. I don't think this is quite twice the size. So depending on where this closes, if we come down to, you know, this level or so, we're looking at a shooting star, and at that point maybe start looking for some bearish action. But for now, you know, it's still been pretty strong lately. We're going to look to the upside. So let's look at the week. We have a 1 inside candle followed by a 2 down hammerish candle. That may qualify as a hammer candle. Bounce right off the 9 EMA. We're looking at targets up here. A lot of targets on this one. So break above this is going to definitely show bullish action. You know, we came down, bounced right off the 9 EMA. Break above this is going to bring in some bulls. Take a look at the daily for our targets. Here's our trigger. Target here, target here, target here, target here, target here, target here at all-time highs. So that's what I'm looking for. That's for you new folks new to the channel. this hopefully gave you this and the previous video. If you didn't watch the previous video and you're a little bit confused about these numbers and whatnot, go back and watch it. Just to really quickly go over it. These numbered candles is a strategy created by Rob Smith called the Strat. An inside candle is a 1, an outside candle is a 3, everything else is a 2. You cannot have anything else. That's the only 3 types of candles you can have. A 2 is whether it breaks the low side or whether it breaks the high side. Either way, it's still a 2. My favorite trades are off inside candles. So off of whether it's a 2-1 or whether it's a 3-1. Here's a 2-1 right here. Here's a 3-1 right here. Either way, my favorite trades are off inside candles. My second favorite is the 1-2-2s. Over here we have a 1 up, or a 1 inside, 2 up, 2 down. Here we have a 1, 2 up, 2 down. Your target is the bottom of the bottom or the top of the 1, depending on which direction you're going. So if I was going to enter this, my entry would be, as soon as it broke the low of this candle, my target would be here, the low of this candle. Same with this is also 1, 2 down, but you get the idea. Watch my other video, the previous one, if you have any questions about that. Like I said, I like to keep my charts simple. It's easy to read, easy to see, easy to find your targets, easy to find stops. So that's what I'm looking for. Thanks for watching. If you have any questions, put them in the comments below, and I'll make sure I answer them for you. As far as stops, I didn't go over that, but let's take a look at what I would do for stops. If you look at the weekly chart, some people may look at this and say, okay, my stop's down here. You can do that. I don't like that. You're looking at $13 stop. In the options world, that's big. Even if you buy a couple months out, $13 move is still going to be, pretty big loss. I would come down. There's a couple schools of thought. One would be either the open of this candle, the close of this candle, or tomorrow morning this new candle starts. Maybe this new candle opens right here. Your stop could be below this new candle, because remember, if it opens here, you're not going to get in right away. You have to wait till it breaks this. So let's just say you open right here. Let's just say this is the open of the candle tomorrow. Here's your open. It comes up. It triggers. Now you jump in. You buy calls. Put your stop right here. If it pulls back down, breaks this, you stop out. Now let's just say it opens way down here. This is too big of a range to have a stop. There's $13 here. You still may be $10 here. You're not going to jump in right here. You're not going to jump in until it breaks this. And if you put your stop way down at the bottom of the open of tomorrow's candle, too big of a stop. Come down here to the daily. Your trigger's here. You may want to look at maybe this one. That's kind of a tight stop, but maybe the high of this candle. Maybe you want to come down to the high of this candle. Use the high of this candle for a stop. Maybe you want to use a 9 EMA as a stop. It's up to you to figure that out, but I'm just giving you ideas on how I look at it. I don't want to enter here and have a stop way down here. That's way too big of a move and too big of a loss. So that's what I'm looking at. And here again, I'll put this up on my Twitter, but there's my watch list. Thanks for watching. Last week I was 5-0 on my watch list. The previous week was 3-1, and the 3 winners were huge. So not bragging, I'm just saying. And I'll throw it out there, for 2 or 3 weeks previous to that, they weren't that good. I'd have 1 big winner and maybe 3 stop outs. So they're not always the best. My confidence level on this watch list isn't quite as high as it was on last week's. Not to say it won't work, and not to say there won't be big winners, but the setups I'm looking at aren't what I would call A+ setups. I'm not saying you can't trade them, just mind your stops. If you take care of your stops, you have 3 stop outs and 1 big winner. That 1 winner is going to override those 3 stop outs. So Thanks for watching, and sorry this was a longer video, but I just wanted to cover some stuff some more, and make sure newer people understood what I'm looking at and how I'm looking at it. So thanks for watching, and good luck this week, and hope everybody knocks it out of the park. Thanks. Later. Bye.